Catalidis, and we're getting ready set for the day. The trading day is about to begin after obviously a winning week last week, a volatile week last week. And Mish, chief strategist at marketgauge.com, is joining me now. And there's been different times that you've been more bullish or bearish. How are you feeling now?
Well, I feel, actually, I want to quote Mae West. I saw this quote recently: too much of a good thing can be wonderful. And that's kind of where we're at right now. And I think that, we still have some juice in the market because of things like comments recently about maybe rolling back on tariffs once again. Obviously, the dovish Fed and the idea that we're going to lower interest rates. Earnings expecting to be really, really strong, even in the 493 other stocks besides Mag 7. So we have more juice left. But as an active investor, I always believe that you need to look both ways before you cross the street, because you could see things being hurled at the market that could cause another correction.
And you often would come on with all kinds of picks in many sectors, but a lot of tech. You always like tech. Are you still hot on tech?
Well, yes, I think I like the infrastructure part of tech now more than anything. Obviously, we have overvaluations, but the big guns that are doing incredible amount of capex, like Amazon, Google, Meta, they could continue to be very, very strong. But outside of those areas, I think you have to look at, like we're into this company called TTMI. It's a global tech company that does a lot of infrastructure. And then, of course, the energy play, the energy to support all of this AI and this tech has been something of big interest to us.
So at this point now, you're going to stay fully invested? Or have you been taking some off the table?
Well, the metals, you and I have talked about gold and silver for a really long time, and that was incredible. Yes, incredible is the word. And we have taken money off the table there, for sure. In terms of my vanity trade, that's been my other big theme. That's the impact of the diet drugs and what happens to this new, thinner consumer. We have not taken off the table. If anything, we think it's still very undervalued. Stocks like Novo Nordisk, for example, and some of the stocks that are related to that, like makeup, skincare, nutrition. We do believe that has a lot of upside. So if anything, I'm looking to add as opposed to take profits there.
Wow, that's pretty amazing. What are some of the names in the vanity trade that have been working for you that you picked, over the last few times we spoke that you still like?
Well, we've talked about Ulta Beauty. I mean, it's kind of near the highs, and so it's been a bit volatile up there. But e.l.f. had a big correction, and that's coming back. Interestingly enough, I'm still looking at stocks like Planet Fitness. Even Peloton can get going as a result. And there's one company that has been forgotten about, but I'm intrigued by it, and that's Stitch Fix. We do have a position in that. After earnings, it fell. But it is a company that if you are now thinner and do not want to go out shopping, as opposed to other e-commerce, because let's face it, Etsy's also had a big run.
Right.
That might be of interest to people because you can order and then return what you don't want.
What do you think about some of the big picture stories? I mean, how rare earth stocks are still jumping this morning. I mean, I saw, all those names up another 4 or 5% after they've obviously been huge. Some of them are 200% and 300%. But when you look at like rare earth, you look at the China story, the tariff story back and forth. How do you feel about some of the big headlines?
Well, I would certainly...
As an investor, not your political views,
Yeah. Well, as an investor, MP has been incredible.
Yeah.
And so, I like that one because I remember that one from when it was a SPAC years ago.
Right.
And rare earth minerals, again, is one of those infrastructure plays that can only have a good future. That doesn't mean we won't see volatility as we see headlines come in and out. But the statement that we heard was that we're going to really continue to invest in that here in this country, and that's where MP comes in because it is the largest mining of rare earth minerals. So I think long term it's still very, very strong. And again, one has to always be aware of risks. We had a big sell-off last week, for example. You have to make sure you can handle those. But from a long-term investment, I would say that's a great place to be.
Right, understood. When you think about some of the other themes in the market, when you watch what's happening with bond yields, now we did dip below 4%. Now some of it is we are paying down our debt, so we've been talking about that a little bit. But what's really going on with the Fed and bond yields? And you got to have, I guess, both in a diversified portfolio. Some folks have bonds.
Well, bonds were really unloved for a long time. In fact, most people felt that the Fed was going to continue to either stay the course or even raise rates because of inflation and fear of inflation. But instead, they've really flipped and more towards the we will continue to actually cut rates as the labor market has some concerns. And we saw last week a little bit of almost a flash crash in the regional banks because of some of the credit defaults. So we feel that the Fed actually said they're going to stop QT, and money supply is already at all-time highs. So I do think that the long bonds, if you're looking at TLTs, which we are in right now, if it gets through 92, which it kind of has gotten close to, I think that really changes the trend from a long-term downtrend that it's been in since 2022 back into an uptrend, which means yields probably will go down to about 3.5, maybe even 3.25.
Right. It's interesting you mentioned the KRE and some of those regional banks and Zion's Bank in particular. We're hearing news from Zion's today. But there was a lot about how, the cockroach sort of story, right? Where there's one, there's more when it comes to Jamie Dimon. But there's been a lot of talk that maybe this really was a specific problem, that it was, secured in this one story, really, more so than something that was broad-based for regionals. How worried are you about regional banks?
Well, actually, I've been worried about the regional bank sector because I watch KRE, which is a great ETF, breaking down as we're seeing all
So you haven't had love for this group.
Well, no, and actually, you mentioned cockroach. At this point, it could be just sort of a one-note story.
Right.
But nonetheless, there is something to be looking out for, and that's the divide between what you're hearing haves and have-nots, and the regional banks, which represent the rural communities where people go to their local bank to borrow money, to start businesses, buy homes, commercial real estate tied to that. I think it's something we have to keep an eye on. Would I panic about it? No. But if we start to see KRE free-falling even more, I would certainly take note of that.
All right. Well, and look, you have some of these Mag 7 names, Amazon, Google, Meta, you mentioned some of the, looking at some of those vanity trades, Ulta, L, Planet Fitness, Stitch Fix, and more. Mish, it's great to see you. Do you think we hit some new highs between now and the end of the year on the S&P?
Well, it's certainly seasonally very bullish. At this point, like I said, volatility is something to be watched, regional banks. But at this point right now, I think, you have to stay long till you're wrong kind of thing.
Right.
That's what we're feeling.
Great to see you in person.
Nice
Mish Schneider is
you.
back in the flesh here on the desk. MarketGauge.com. Mish Schneider, thank you.